Okay, good afternoon, everyone. Welcome to another episode of Beyond Connections, the bi monthly opportunity for our MyTrade clients and also everyone tuning in to ask us, the analysts of Abaca Securities Corporation, their questions on the market and everything and anything in between. So, I am Bess, one of the analysts for Abacus, and today I'm joined by.
Hi guys, I'm Rainier and also one of the analysts covering the consumer names in the market.
And I am Isaiah, one of the technical analysts for MyTrade. Thank you for joining us today.
Yes, and what a crazy day to join us with lots of news coming out. So while we wait for your questions, everyone, please feel free to post them in the comment section and we'll do our best to address your queries. But first, as usual, I see what can you say about the movement for the index or maybe any specific stock that you're watching lately.
So, Joseph, can we have a look at the chart? There you go. That is the index. So, for the market participants who have been trading this market, it is not a good look. For the chartists out there, this appears to be a bearish rising, a bit of a rising wedge, which typically resolves to the downside or just goes lower. Um, Although the charts that I have been looking at has been Converge one, has been bucking the trend, and maybe Rainier or Bess can add to the story behind this later, and as well as Keeper, which has been holding relatively steady as well. Let's see if it holds there. So, yep. Rainier, would you like to add anything or?
Well, at least for Keeper, well, it has had seen uh, one of the better uptrends that the market has to offer lately, and this is still reflected from its earnings. That it has been consistently growing compared to some of its peers, especially if you compare it to Emperador, which is trading at much higher valuations. So even at 250 or at the current price of Keeper today, it is still considered cheap compared to its peers, especially given the growth that we are seeing for Keeper, and it continues as well to add to its portfolio with some of its acquisitions that should be accretive for the company and sustain its growth trajectory. Uh, yeah, I think that's it for Keeper. Maybe Best can add some for Converge.
Yes, so for Converge, we recently turned positive on our outlook for the company. Previously we had concerns about the source of the earnings, which is mostly from um, a decrease in their provisioning for losses. But in the latter part of last year, this is no longer a big source of earnings. It's most of the growth is coming from their core telco business, and also their if you are an avid reader of our short takes, which is the daily report we send out to our clients, today we discussed that there's a chance that Converge um, might recognize a gain if they decide to sell their what's called their Bifrost cable system, or if this will be a source of recurring revenue for them. Um, that aside, the stock itself is trading at very low valuations compared to the regional peer, and given that uh, we are expecting strong growth for Converge for 2025, we recently called a my own weakness for the stock. We would prefer um, if you are interested in Converge to wait for pullbacks before adding that to your portfolio. But in general, we are quite positive on the stock, so that aligned with the technical view. One of the rare times, fundamental and technical might would align. So, still no questions on the chat box. So, the main news or the biggest news for today is the Trump tariffs that were announced early this morning. Um, we it's there's been some comments on the news that the Philippines is one of the well or one of the least the ones that have the lower uh tariff rates in the list that the White House came out with, and that might give us an advantage. However, this is still a very fluid issue. We might see uh, changes still on what the U.S. government will actually implement. So we're not yet clear on what the actual impact on the economy would be. However, as we have said previously, the Philippine economy is mostly domestic. It's mostly drawing from domestic demand, and exports is actually a small portion or small contributor of the overall economic growth. There will be some impact, mainly just because we are not that insulated from world events. So um, it will probably take some time to fully digest what the tariffs will have, what the impact of the tariffs will be for specific companies. But we have given a note already this week on which companies will probably have the knee jerk reaction to the recent developments on world tariffs. So hopefully, if you have questions on that, we can discuss that further. Anything interesting on your end, Rainer?
Well, I think apart from what you mentioned, Bess, and one of the trending asset class that has outperformed so far because of the uncertainty given the Trump tariffs is probably gold, and we are seeing the gold rush these days and over the past weeks. Gold has been rising and breaking its record highs, continuing to draw all-time highs. And as of recent, I think the peak at this point, which happened earlier today, was at 3160. And since the first quarter just ended a few days ago, the first quarter of 2025, gold average, I think, at about 2,862 per ounce, which is, of course, another record high. And the positive thing there is prices grew 38% year on year and 8% quarter on quarter. So that is positive for the gold miners, namely Apex, OGT, and Felix Mining. I think the price appreciation alone warrants at least a full rating for three of these names. And we have mentioned before in our short takes which of the three is our preference because mainly because of their production capacity. Since some of these names have had production concerns that may have impacted its outlook for 2025, but our preferred pick continues to be the one that has the most positive outlook when it comes to its production. So higher production plus the appreciated price should result to better earnings and share price appreciation. So that is one of the trending uh, stories, at least on the positive end of what was mentioned on the tariffs. So we do have questions now, and I think we can take them now. Uh, so first, insights on East-West, please. So maybe you can both provide the technicals and fundamentals.
Yes, and also another question. Maybe you can also address the other question on East West. So we were we recently changed our outlook on East West to neutral, mainly uh, be, mainly partly because of what is mentioned in the comment section there of a a drop in their net interest margin, which indicates that they may be seeing some tougher competition from the other universal and commercial banks that are sort of encroaching into their target market. So East West is a very consumer focused bank. They are the most consumer focused listed bank among the major listed banks. So 70% of their loan book is for consumers, while most of the bigger banks, uh, most of them are ranging from 20 to 50%. But in recent years, they are shifting their focus from their traditional target markets of corporate and commercial loans into retail loans, um, in an effort to chase yield, since consumer loans or retail loans pay a higher yield, which in itself also comes with the cost of higher risk. Um, and East West has had the advantage previously that they have been in this consumer focused, consumer lending focused um, market for the longest time. So they have that advantage of having more experience in terms of managing that risk. There are some of the other banks have seen um, difficulties in venturing into this new market for them. There have been increases in their uh, delinquencies and non-performing loans for some of the other banks that shifted their focus towards consumer loans. But it seems that um, uh, East West competitors are learning already of how to compete in that market. So that's probably one of the reasons why the net interest margin for East West dropped in the fourth quarter of last year. We're also seeing, although East West's loan growth is within or at the average for the industry, other banks are seeing higher growth rates, which is partly also one of the reasons why the that margin is not as or didn't improve versus the other listed banks. Um, so that probably answers also Ken's question on which will be shown on the screen now. So I maybe on a technical viewpoint, may I can give some comments.
On the technicals, Joseph, there you go. Thank you for the chart. On the technicals, it's been relatively easier to trade since it's trending higher. Even at these levels, after the uptrend, you still get about a 5% dividend yield, gross yield. If you're looking to enter, probably look for a break above the downtrend line, or you can probably position a little bit closer to support at about 10.04 pesos. So, there you go.
Okay, maybe we can take the question from Pochi Useda. What are expectations for March inflation? So the PSA will come out with the numbers for March inflation tomorrow morning at around 9 a.m. Our expectation is that this will be slightly slower than February. So we are looking at around 1.9% or at most 2.1 for which is would be steady from the February level. I think other or most of the market is also expecting a slightly slower inflation rate for March versus February. This is still stemming from the lower prices of rice for March versus the both versus the February and also more so versus where rice prices were last year. We are also seeing a um, deceleration in the inflation rate for meat. So these two combined take up about 15% of the CPI basket, We also saw fewer rollbacks in March. Um, so both both that and the lower prices for rice and meat should be able to offset the higher electricity prices last month. Um, Hopefully, if our expectations come true and the PSA announces tomorrow, this may see or may result in some temporary reprieve in terms of sentiment. Although it's more likely that it would be overshadowed by the concerns on the volatility from the tariffs announced this morning. So hope that addressed your question, Pochi. Nice to see also some new names in the chat box. Uh, and also still nice to see all the familiar Suki viewers. Hello, LB De La Cruz and Ken. There are uh, maybe you can take on the question on Terra Solar, Rainier.
For Terra Solar, so to read the question, Terra Solar is a massive fixed contract of 23,000 per kilowatt per year, meaning 14 billion for contracted per 600 megawatts. Profitable from the start despite massive development fees. I think the question here is whether it will be profitable from the start. I'm not so sure of how they will record uh, their operating expenses throughout the year, and especially once the phase of the first phase of the Terra Solar project will come online. But I think when it comes to 2026, during Feb, uh, once they recognize those revenues, I think it will be significant for Terra Solar uh, to be accounting for those revenues. And uh, I don't think that during that period, during the first half of 2026, uh, that I I'm not sure of the figures. Sorry, I'm not sure of the figures that you shared here, Ken, because uh, it's quite unclear for me at least. So, but our expectation for the first half of 2026 that once operations do begin, I think it might be profitable right away because the first 2,500 might already be contracted at that point. And given the margins, particularly for these solar projects, are quite positive and should be accretive for SPNEC and Meralco. So the construction fees, they might be recording it right now. I mean, beginning now and until then. So it won't be lumped into just one quarter when the Terra Solar is now online, but it will be uh, recorded as we go on. And once the first phase comes online, it will be profitable. So again, given the margins and the timing of it at Feb, it will be at the peak of the solar farms or solar energization once it begins its commission. So I hope that answers your question. I'm not so sure what the question here is, but I think we addressed profitability, I think, at this point. So yeah.
Okay. Next question from LB. Maybe let's take this one first and deal with the other question after it. So, what's the slowdown we experienced today due to the effect of the tariff from the US and March inflation to be released tomorrow? More so from the from the impact of the tariffs that were announced by the U.S. and maybe mirroring the impact on the U.S. market. So the uh, this would be also be related to your other question on ICT. The U.S. tariffs are most likely going to result, or if they're implemented, they're most likely going to result in lower trade volumes globally. Uh, this is this will be negative for ICT. We see slower growth rates for the volumes for ICT. So that negative sentiment uh, would be valid. However, we are long term positive on ICT still, since um, we believe that the geographic diversification of ICT's business would shield it from the worst effects of the tariffs. Um, Recently, there was a port that was sold in the Panama Canal that had very high valuations, and if that is a valuation level um, that can be taken as not a standard but on the high end, it would be positive for other port companies like ICT, because the valuation for ICT right now is quite low if we compare it to that. So relatively, the stock is relatively cheap if we look at it that way. But definitely, the impact of uh, the tariffs from the U.S. on global trade will be felt in ICT's volumes, possibly this year and next. Uh, Still, ICT is also looking at uh, is always on the lookout for port acquisitions all over the world, which will add to their business as well. So ICT has ways to mitigate the negative impact. Maybe Rainer can take on plus, and then maybe technical outlook from IC as well.
Yeah, thanks, Wes. But for Plus, it's actually down today, which is quite weird because the tariff situation has probably have no effect, or if ever, just a small bit for Plus, probably on consumer spending. But for Plus, the outlook for it, I think in the near term, there are some catalysts that we are seeing. So first would be the PAGCOR share. So beginning January 2025, which was last quarter, PAGCOR again implemented a lower PAGCOR share for e-gaming operators like Plus, so that would be very positive for the margins for Plus, meaning the net income outlook for Plus would be much higher, uh, but of course not the triple digits that we saw in 2024, but it will still be accretive for 2025, probably uh, be much at the highest probably in the first quarter of 2025 because of the reduction also in April 2024. So those subsequent reductions in PAGCOR share of gross gaming revenues will drive Plus's net income for the first quarter. So once it releases in May of its first quarter results, likely to be at a significant growth rate on a year-on-year basis. And another catalyst potentially is what it released, or there was an article a few days ago that Plus could potentially get the online lotto operations of PCSO. That would be substantial as well, given the operations of PCSO. But at this point, management did neither confirmed nor denied of the potential transaction, indicating that they are open to such opportunities, and currently whether to it is still early whether to indicate or not that they will be getting the acquisitions. And apart from those two, there is news, or there are um, there are already forecasts that Plus will be entering the index by August, and we do see that possibility happening, and this would be positive for its share price, as seen from the recent rebalancing of China Bank and AREIT, which both have had a positive impact to its share price. So I think we can go on to technicals.
Very quickly, the technicals for Plus, the uptrend would probably end in the near term on a break below 31.42, and ICT, we will probably see a change in trend at above 382 pesos. So still trading in the downward channel, experiencing some selling pressure. So yeah, there you go. Those are the charts.
Next, I think we have time for a couple more questions. Um, Maybe not a question, but a comment from LB De La Cruz. Um, for those that are in the are interested in investing in the long haul at the very low valuations, right now may be cheap enough for, or may indicate that this might be a good time to buy. But we would prefer that maybe we would wait for the volatility from the tariffs to subside a little before uh, investing in a big way. But you LB here mentions the rate cut from for next week that is expected, which is related to discussion from Sotnas here. Well, I hope I pronounced that correctly. But we are still expecting a 25 basis point rate cut when the BSP meets on April 10, especially since we are expecting inflation to decelerate, to have decelerated in March. So that would be one factor for the BSP to cut cut their benchmark rate next week. But it's possible that the tariffs from the U.S. could be quite inflationary for the U.S., which would result in the Fed possibly um, holding back on their own rate cuts, which may affect the BSP's own um, monetary policy decisions. So we are recently we the outlook for banks have been quite positive, but this or have turned more positive than before, mostly from the ROR cuts that the BSP had implemented at the end of October and at the end of March. So this freed up a lot more liquidity in the system, which is now available for lending, which is also partly why net interest margins um, were mostly neutral or steady or flattish when we had previously expected that NIMs would start to decline from the interest rate cuts. So we are positive for a select few banks. So um, we are positive for the big three banks more on BPI, which is seeing some uh, uh, good developments in terms of how they have been focusing more on consumer loans without a very large increase in their NPLs. We are seeing the impact on their margins from that being more steady than the other big three banks. And we're also positive on Union Bank, which is or um, which has been able to increase their proportion of their consumer loans to total loans very quickly to almost 60% as of December. So that's one of the banks that is giving a lot of competition for East West as well. So I hope that answers the question for Sotnas. Uh, Also, another question from LB De La Cruz. What will be the effect of Gcash listing on AC since it will be holding 50% of AC Ventures? We have said previously that that Gcash's IPO is positive for Globe, but it will also be positive for AC. Since as you mentioned, AC has um, direct ownership in Mint um, through AC Ventures, but also through Globe. So it would be the Mint IPO would be positive for AC, but more for Globe since Globe has higher ownership in that. And I don't know if Rainer has any comments on Ken's question on Hotel 101. We did mention this in a note. I think I'm not sure if it was this week or last week, but our point in the published note is that we do have concerns that that DD did not uh, or the management has made representations that the listing will definitely push through, but have not or have failed to mention that there are risks still for this. So it's more of on that lack of or a little not lack of but um, maybe some discrepancies in their not discrepancies but lapses in transparency. So that was our main point in that note, not necessarily um, what how long the mergers uh, take to complete in not notwithstanding that deadline in July. So hopefully that addresses your concern on Hotel 101. Um, any comments for the stocks that I discussed from these three questions?
Well, I think for the Hotel 101 or DD, since that's the one that is affiliated on that, I don't think there is any action that needs to be done, especially for DD. I think there is still a lot of uncertainty whether Hotel 101 could do its listing, and think the action can be done once there is some certainty on whether they are able to or not. So I think it's something that could be discussed later, but really now there's not no action to be done. Just stay on the sidelines or look for other place.
Sorry, another question from LB De La Cruz. Would it be good to invest in Apex and OGP as leverage when the index is down?
Uh, I wouldn't want to see it as a leverage when the index is down, but I do prefer to track it with how gold prices are trending currently. Since gold prices have barely corrected, and if we look at historical levels as well, they haven't contracted or they haven't corrected in a significant way. So, and given the uncertainty in the next few months or so with the tariffs, gold might still be on an elevated level or might even consolidate it at current levels. That's why Apex and OGP might have a leg to stand or might even have another leg uh, to push further, and that should be positive for them. So since we don't have any listed stocks, or we don't have any listed stocks that are in the index, I do prefer it to look at these gold stocks separately. It's not a mutually exclusive relationship. So uh, I think it's better to track the gold stocks or the gold miners to the gold prices and not versus not versus the PSE index.
Speaking of gold, Maybe I see. Do you do technical analysis as well on commodities, specifically gold?
We
Maybe
can
you
just
can close us out with that.
well, we can just have a quick look at gold if you want to. So here's a gold chart that let me just try to extrapolate the recent trend. So in the very near term, gold looks like it's a little bit on the overbought side. So if it falls, like Rainer said, if Apex starts to track gold prices, maybe you have an opportunity to buy Apex once it retraces because gold is overbought. So see Apex, it's a little bit rallied strongly. So may you may want to wait for it to consolidate before adding or initiating the position. So that's it for
Okay.
gold and index.
Okay. Thanks. I see, and I think we already addressed all the questions in the comment. So that's it for today. We also have no time for if ever there are other questions that pop up. Hopefully, this has been a very informative and useful episode for you guys. Thank you for tuning in as usual. We will have our next episode closer to the end of the month, and hopefully, we will see better movements for the both the index and for your chosen stocks and portfolios. So thank you for spending your afternoon with us. Maybe IC and Rainer has some parting words as well.
I just want to thank everyone for joining our show today. Wishing you all the best. All uh, good luck in your trading. So, yeah.
So it's pretty much the same for me, and thank you everyone for joining us.